So today we have Brian Terry. I got to know him when he asked me to speak to his group about what I was doing, zero DTE trading. It was probably been 5 years ago or so. Brian runs a group in Orlando called the Central Florida Option Trading Group, very similar to ours. They meet once a month, I think, maybe more or less, and always a topic. It's usually presented by Brian will present, or he brings in people or members of their group present. And let me stop sharing, and then Brian can jump in, and you can share your screen. Brian, okay, I'm seeing that. Let me get things set up here. Okay.
Okay. Hey, Tammy, can you see my screen?
I can. Let me get it set up here. Okay, can people on Zoom see that? Uh, They 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 do. They mostly meet in person, but they do have a few people. The question was,
Yep,
Brian, do you do a Zoom meeting too?
we do. We do them live in person ever since we got past COVID, and we do record them on Zoom. So you guys are welcome and encouraged to
Yeah.
join and join in with us.
Yeah, I get their notifications. You might give us where they need to email to get on the
Sure.
mailing list. And
If you go to meetup.com, and just search Central Florida Options
there you
Group.
go. Yeah.
And I'll give you my email address later, and you can email me if you have any questions or problems getting on. But we'd love to have you join us. We have a pretty good group that meets in person, and we meet at the Total Wine Store, which is awesome. Sometimes we have a wine tasting after. So, but the online, we've had people kind of all over the country join because we opened it up during COVID, and we had a lot of people join. So
Great. And by the way, we talked last month among the group of how to out reach out to more people, and Meetup was one of the suggestions. And I did sign up this group for Meetup, so we are announcing the group through Meetup. Is anybody here from me? Did you get the notice from Meetup, or you've gotten the notice through? Okay, I had about 10 people say they were RSVPing, but I didn't know if they'd show up or not. But maybe we can expand our group a little bit and uh, get some new members and kind of grow the group a little bit. Anyway, Brian, I will let you introduce yourself. And I know Brian's been a long time options trader, and we've done some things together like Pong, and kind of keep in touch with each other. But go ahead and introduce yourself, Brian, and then you can go into your strategy.
okay, great. So hey everybody, my name is Brian Terry. I live in Winter Park, Florida, and about 8 years ago we started our options meetup group, and we started as the Winter Park Options Group, but people got it confused with Colorado, so we changed it to the Central Florida Options Group. Um, so anyway, that's a little bit about me. I've been trading about 10 years, trading options, probably 8 of those 10 years. So I tried a lot of different strategies. So this is one that has been pretty fun to work on. I'm happy to share it with you guys. And Tammy,
Yes.
I can't click where I go to the view. I don't know if you can do that for me,
Okay,
or
here.
let me have just do the
Let's
slideshow.
see. Let's see. Here, let me change it to one participant can share at a time.
Okay,
Then now can you do that?
no.
Huh, weird.
But you could just do it for me if you want. Just click view and slideshow.
Well, I can't click on it either.
Oh, okay. Let me unshare for a second.
Yeah. maybe you're trying to click in the Zoom view, go to that program that you're sharing.
Sorry about this.
No problem.
Okay, now I can do it. And am I sharing it yet or not?
Yes,
Okay,
we're
perfect.
seeing you move your mouse.
Okay, and you see earnings strategy?
Yes,
Okay,
this is an overview. Yeah.
yeah, perfect. Okay, let me just get there. Okay, so anyway, so this is a strategy that's kind of focused on what happens after an earnings event. And so my thesis is that, and you can see the slide, right, Tammy?
Yes.
Okay, perfect. Okay, I won't ask again. Um, I have found over the years that trying to anticipate earnings and doing a trade through earnings is difficult, and it will drive you crazy because not only do we get the direction wrong a lot of times, just because it's pretty much a crapshoot, you also get the magnitude of the move wrong. So you might be right in the direction, but it went further or not as far as you anticipated. So I've kind of said, that I couldn't figure a way to trade earnings trades kind of effectively and with a high probability. But so I started looking at, well, what happens after earnings and how does one, we trade, use a stock right after earnings and take advantage of the volatility crush on options, as well as if we knew, what the history of how a stock moves after earnings, could we set up some trading strategies to give us an edge? And so one of the things that I kind of base a lot of the strategy on is what is the known historical price action after a stock has announced earnings. So that's kind of the thesis. And I started out with this, just using credit spreads after the earnings event, but, kind of it expanded and now kind of do some other strategies like diagonal calls, even naked puts, some different things like that. But that's the thesis is just really how can we use um, an after earnings event to develop an option trading strategy. So what happens to options as an earning events approach? So, we all pretty much know that as earnings approaches, the implied volatility increases just because not that there's anything wrong with the stock, it's just that it's an unknown risk that's approaching. So as that date, gets closer and closer, that IV in almost all cases increases. And a lot of people use that implied volatility increase to sell options and hold it through earnings, like we talked about. But my experience has been that's a hard strategy to trade, with a high probability win. However, after earnings are announced, something happens to the stock. It almost always pops, goes up based on either good earnings or good forward guidance or drops. We saw a stock the other day drop like 25% after earnings. So so we can use, the after earnings, after that risk, unknown risk of what is the stock going to do after earnings. Now we can look at, is this a tradable kind of event? So the IV does drop right after the earnings announcement, but it kind of gradually goes back to normal over a period of about 1 or 2 days. And every stock is a little bit different, but what I've seen is they do drop, but there's a little bit of time to get that elevated IV. So, what are kind of the ideal market conditions? So, one of the things is we want to make sure that we don't have any major news events upcoming or just past, particularly related to the stock. There was a stock, I forget the name of it, but the CFO resigned and the stock went down 40%. So if that stock was coming into earnings, I probably wouldn't consider looking at it or making a trade on it. And then also, we want to make sure that there's no major economic reports coming out at the same time the earnings are coming out. For example, if GDP was being announced at 8:30 in the morning, the same morning a stock was having earnings, probably not a great setup. And then, we're going to take advantage of the increased implied volatility as the earnings are released. And the other thing that I think makes a big difference is we want to have, you know, understand, well, how will a stock move, or what's the history of that stock after they release earnings. And we can go back where there's some places we can go to see, like if a stock went up 5% after earnings over the last 2 years or 5 years, how has that stock moved, so that it kind of gives us some additional information that increase our probability. And the other thing that we want to make sure is if a stock is expected to move, say 5% after earnings, plus or minus 5%, and it goes up 15%, that's probably something, an outlier. So we don't really want to, choose a stock that the move is way bigger than the anticip or worse than the anticipated. So, any questions so far?
Brian, I have one. Does it make a difference if the earnings announcement comes out before the market open or after the market closes? Does it?
That's a great question. If it happens after the close, we really have a whole extra day of seeing what the stock has done. So it gives us a little more information as to what's, the time from the announcement, say at 4:30 Eastern till 9:30 Eastern, what has that stock done? So it helps give us a little bit more information. Um, but of course, as soon as the market opens, it's going to do what it's going to do. But I think if it's an after earnings trade, it's a little bit easier to kind of analyze versus they announce at 8:30 in the morning and the market opens an hour later.
Any other questions? Think we're good.
Okay. So, you know, what types of, option trading or setups can we use on the after earnings trades? And I've kind of listed a few of them. I began this journey doing just credit spreads. So after the earnings was announced, I'd go in and sell a credit spread. And we'll talk about that. The second thing that I've started to do is diagonal call spreads, or a poor man covered call after earnings. And then my third kind of go-to strategy after earnings is a broken wing butterfly, which is just a butterfly with non-symmetrical wings. So the reason I use the broken wing butterfly is if the stock moves too far, like we're right in direction, that it's going to go up. But if it goes too far, a traditional butterfly call wing could end up losing money. So I didn't want to do that. So I'll do a broken wing butterfly. You can also do a cash secured put, or just a straight covered call after earnings. So those are the different setups that I think you could use in terms of after earnings trades. You could just, I'm sure there's others. These are the ones that kind of come to mind for me. Okay, so here's just a sample of how you would set up a bull put credit spread after earnings. And the expiration, that's pretty variable. I mean, you could do it as short as 1 week, or go out, 30 to 45 days. But I found that about 15 days is a good for these after earnings trades. Um, but I have used monthlies out, and what I will generally try to sell is a delta somewhere 15 to 25, but it's also going to be based on what's the history of the stock movement after earnings. So that's a real big key. And then, we're not looking because we're only holding these for a shorter period. I'm looking for, between 50 cents and $1 on a $5 wide spread. I will do $2.50 wide spreads sometimes, and even $10 wide spreads. But these have worked really good because we know how far, what the stock tends to do over the past few years after earnings. We can sell a put spread that already has a high probability of winning, and we take advantage of the implied volatility to get us a little more credit on the trade. So that's the structure for a put credit spread.
Do you
And
put a stop on these?
I
Or,
I do a manual stop. Actually, I'll go to
okay,
the next slide because
okay.
I'll look to collect between 50 and 70% of the max profit. So if I get $1, I'm getting out at 50 or 70 cents credit capture. I will exit the trade if the price goes to 200% of the credit received. So if I get $1 and now it's $2, I'm exiting the trade. The other thing that I will do on these trades is draw a really line in the sand support level. If we were doing a call, it would be a resistance level. But on the put spreads, if it breaks the support level after the trade is start, then I'll leave, even if it's not 100% of the credit received. And the other thing that I have kind of built into my strategy is to close the trade at least 2 to 3 days before the expiration to avoid gamma risk. So that's kind of my, it's pretty simple exit, target and all that kind of stuff. But the key is we're basing this on an earnings event based on known information of what it's done in the past. Okay, so alternate trade strategies, and I'm doing more of the first one, diagonal call spreads, which some people call a poor man's covered call. So in this case, I would go out, say, a month to buy my long call, choosing somewhere between a 50 and 60 delta, and then I will sell the next weekly option up against it based on the expected move. And those have worked really well lately. Um, and then the other one that I haven't done a lot of, but the broken wing butterfly, this would be using either a call butterfly or a put butterfly. And what we would do is use about 30 days, 15 to 30 days after the earnings event. And we would use the strikes that would capture a majority of the expected move. Meaning that if we know based on history that the stock will move, say, 5 to 10%, then we're going to probably set our kind of middle strike at about the 5% level. So those are other ones that you can trade based on the information we glean from the after earnings event. Any questions about these two strategies? Okay. All right. And then you can also just sell a cash secured or naked put. And in this case, I would probably, if I was bullish, I would sell either the at the money or below the current price based on the after earnings trade history. So that's another way of doing it. And some people have told me they like to do this in case there's a dividend coming up. So they want to set the expiration before the ex-dividend date. So if they got the shares, they would also be able to collect the dividend on the stock.
We have a couple of questions,
Sure, go ahead.
and I'll pick them up from the chat.
Okay.
Um, when are you putting on the trades? The day after the announcement?
Yeah.
And or a few hours after the announcement? Like,
Yeah, that's a great question. I think I
okay.
have that on the slide, but what I'll do is I at least wait, at least a half an hour after the open before I put the trade on. And then I'm looking at the chart on a shorter term basis, 5 minute, 15-minute basis to see at what point does all the gyrations kind of work themselves out. So a lot of times I'll put the trade on sometimes as early as 30 minutes. More likely, I'm putting it on the afternoon, probably right before lunch of the day of earnings.
Uh-huh. Another question is, can there be a neutral version of this strategy?
Yeah, you could. And I don't trade it as a neutral strategy, but you could trade it as an iron condor if you knew. And I'll show you kind of a website that shows you the move. So you could set up an iron condor outside the expected move, and then something like that.
And sell an iron condor?
Yeah, sell an
Yeah.
iron condor because like say for example, the stock will move plus or minus 5%, 21 days, 30 days after earnings. You could easily sell an iron condor outside that expected move.
Okay.
Hmm.
Another question is, there's a lot of strategies here. How do you decide which to use for earnings
Yeah,
announcements?
I mean, I think the reason I put a lot of strategies out there is because whatever strategy you like, for example, if you like selling cash secured puts, this will work for that. If you like selling covered calls, it'll work for it. Um, you know, I personally like the credit spreads or the poor man covered call,
Okay.
but that's just a personal thing. You could use, again, whichever one you feel comfortable. It's all kind of trying to accomplish the same thing. These are all trades that based on the earnings, after earnings information that we already know.
Okay.
Okay. So, and then the another alternative, and I don't do this one personally, would be a covered call where you are actually buying the shares after the earnings event, and then you could sell either an at the money strike, which will, give you a great return on your risk with a little bit of downside protection. If you're bullish, you could use an out of the money strike and take advantage of that growth plus credit from selling the call. Or if you're conservative, like I tend to be, um, you could sell an in the money covered call. So even though we think the stock is going to do well, you sell the in the money covered call. The call you're selling is an elevated IV, so you're going to get nice credit, so it can generate a really good income with a lot of downside protection. So I personally do a lot of in the money covered calls for income. So this would just be an add-on to something like that.
I've got a question here.
Yeah.
They're getting a microphone. Just a second.
Okay.
Oh, but it sounds like your strategy is to get called away, and not hold those shares.
The, could you hear that? With the covered call, it sounds like the strategy is to get called away.
If you use the in the money strategy, definitely. It's just purely an income strategy.
Okay.
The out of the money, you could, depending on how far out you set your strike, you could set it up, based on, slightly further out than the expected move. The at the money would probably get called out if it went up. So yeah, but this is really isn't a strategy to kind of acquire shares for a long
Yeah.
term. It's really more of, a trade based on using that vehicle. Great question though.
Yeah. Okay. We're good.
Okay. All right.
Oh,
So,
nope, one
oh,
more question.
great.
Sorry.
No, that's great.
So when you say out of the money strike based on anticipated move, the anticipated move after the earning release, meaning
Cool.
like where the
Cool.
stock goes after, not the anticipated move, for the earning.
Right, right. Because the earnings event has already occurred.
Okay.
So it's gone up 5%. And based on the history, I'll share with you guys in a little bit that, the history shows that if it goes up 5%, it will tend to go higher by X% over the next 21 days. So you could set your out of the money strike based on that information.
Thank you.
Okay.
Another question.
Yes.
Is there a typical time horizon that you see when the elevated implied volatility decreases? There a time to move on this?
Yeah, I mean, I would say you definitely want to be in this trade within a day or two of the earnings event. Um, I always try to get in that same day. So if the market opens at 9:30 here in Florida, I'm trying to get in that trade before noon.
Another question on chat is this similar to Tasty's expected move, or is this a different strategy?
It's not based on Tasty's expected move. The website that I use gives us an expected move. Or actually, on the website, we'll actually show you the actual move on after earnings
Uh-huh.
historically. So sometimes they're pretty much coincide, but sometimes they don't. And this will show you, and I don't mean to keep saying I'm going to show you, but the website will show it goes up 5%, it went down 5%, that kind of thing. And where did it move, 21 days, 30 days after the earnings event?
Yes. Another question is Brian using volume weighted skew deviation to manage his stops?
I am not.
Okay.
Yeah, I mean, this is, based strictly on my entry is strictly based on historical data on a stock on how it moves after earnings. And I go back 2 years. So there's, probably 8 to 9 earnings events. And you can go back further, but if you go back 2 years, 9 earning events, and they're consistently, that if a stock goes up, it continues up. If a stock starts down, it does, that kind of thing. You can build a strategy that kind of enhances an already high probability strategy.
Okay. And then the website, are you going to show us what that is?
Yes, yeah, I will.
Okay.
Okay. Yeah, I think it's on the next slide.
Okay.
So anyway, but I appreciate the questions. So I use a website called optionslam.com, and I'll show you some slide, screenshots of it. Now I did while I was waiting for 10 o'clock to roll around, I went to chat GPT and said, what are the other alternatives? And so a couple of other ones were Market Chameleon. There's one called ORATS, ORATS, and there's also one called Live Volume, and I think that's by the CBOE. But I use Option Slam. It costs about $20 a month, or $200 a year, and it provides a lot of great detail, and I'll show you that. I look at, what is the expected move of the stock, and I go get that from Option Slam. And then I want to look to see how did that compare to previous openings after earnings. And like I said, I try to go back 2 years. You can go further, but that's what I use in terms of looking for trades after earnings. So here, can y'all see this okay? This is a screenshot of Option Slam. Can you see it okay?
I
Okay.
mean, we see it's a chart and there's some.
Yeah. Actually, below, if you look at where it said, now this is JP Morgan,
Okay.
but they will list what the earnings date is, and then it will show you, what did the stock open up at in terms of, like in the first one, it gapped up, or down 0.35%. And it will also show you what happened that particular day. It went up as high as 5% and it closed 4% up. So that's the data that I use just to start to look at the potential stock. So, and up, let's see. Actually, at the end, I can bring up that website if you want, Tammy.
Okay, yeah,
And
that'd
we
be
could,
good.
because there's a couple that are actually coming up next week that we could actually look at and see it a
Okay.
lot better.
That'd be good.
And it will show us, what they expect the move to be. But the key information that I like is actually this information. So this is kind of, I think, where we can use this after earnings information to better set up a trade. So this goes back again, like not the past 9 earnings. If you want to go back 10 years, you can definitely do that. But what it does, it shows us in this first column, what is the post earnings open? And then the next column is what did it do after one day? So the first day that it announced earnings, it either went up or down, a certain amount of movement. But what's more interesting to me is going out, say, 8 days or 13 days or 21 days to see how a stock moves after the earnings. And for example, this is JP Morgan as well, but after earnings, after 34 days, the stock was up every single time. And if you go 21 days, the stock was up 7 out of the last 9 times. And the time it was down 3%. So if you're selling a credit spread that's, say, 5 to 10% out of the money, that gives you a lot of confidence that this trade is in your favor.
The nice thing about the strategy is you also know, because you're doing this after earnings, if the earnings were a disappointment or if
Yep.
they were good. So
Exactly.
you could stay away from the negative ones, assuming I assume that those were probably disappointing earnings with negative results.
Yeah, and one thing that I've seen is that if you have a stock that has bad earnings, they don't tend to recover very quickly. Now, JP Morgan is a great company and it's a solid company, so it's going to do pretty good, post earnings.
Yeah.
But you take some of these really volatile stocks that may not be that strong technically or fundamentally, and they gap down, 15%. There's a really good chance it's going to be lower than 15% in 13 to 21 days.
Yeah. You could do a call credit spread in that.
Yeah, you could do a call credit spread, or someone had suggested to me a put butterfly, which kind of improves your risk reward kind of thing. So that's another alternative. But this information I think is pretty helpful.
What is pre-earnings EVR?
What does EVR mean?
Yeah, EVR is a calculation that they use that shows it's earnings volatility rate or something like that.
Okay.
And it kind of goes from 1 or maybe even 0 to 10. So the higher the number, the higher that EVR is going to be. I mean, how much more volatile it would be.
Yeah.
So, and I will tend to, like, if it's a 9 or a 10, I probably wouldn't trade it.
Yeah.
But and it would probably kind of play forward in looking at the numbers in 13 days, 21 days.
Another question that we got in chat: sometimes the earnings are good, but the stock still goes down because of forward guidance.
Yeah.
How do you deal with that?
Well, I want to wait I want to wait until all of that, kind of passes. I think one mistake a lot of earnings traders do is, the stock may initially start up and then the CEO or the CFO starts giving forward guidance and the stock will start giving back those gains. So that's why I want to wait, a period of time to see how it moves. Like it's not surprising a stock, particularly a really volatile stock, may gap up like 12% at the open. And you're like, wow, this thing is off to the races. And then within an hour, it's given up half of that 12%, or all of it in some cases. So you want to give it time to let kind of everybody, all the information sink in. But this is strictly saying, after, 8 days, 13 days, 21 days after an earnings event, this is what this stock has done from the opening price. I love the questions, so keep them coming. So anyway, so this is the post-earnings price movement chart, and it's on optionslam.com. So that's kind of a lot what I base my, decision on. So I already kind of have a list of stocks that are going to be announcing earnings, or as Tammy said, announced earnings last night. And now I can kind of say, okay, based on these guys gapping up, then I start looking for potential trade setups. Okay, so this is was an old example on JP Morgan. This was a credit spread. So they had earnings on 7/15, July 15, before the market opens. And something that I do, maybe because I'm dying to find out what the movement is, I want to find out when they announce their earnings. So you can go to a website called Earnings Whispers, and it will tell you the exact time that they are announcing their earnings. So in JP Morgan, it was 6:53 a.m. Eastern. So you can kind of start to say, okay, how is price moving from the time they announce it all the way through the open? And this one was the implied move provided by Option Slam said the stock would go up or down 3.64% at the open. So that ranged, anywhere from 276 to 297. And at the time, the stock was trading just north of 286. So it offers, JP Morgan has weekly options, which we want to have. I skip anything with just monthly options. And you want to make sure that it has great open interest and good liquidity. And the other thing that I do as we approach earnings is check out the company. How is it rated? And I use bar chart as one of my sources. I want to look at, what's the opinion of the stock? What are the analysts saying? What's the support and resistance levels? Things like that. So if I'm planning on a bullish strategy, which I mostly do in these after earnings, I want to know, does bar chart, feel it's a bullish stock? Is it in an upward trend? And things like that. So that's just an example. You would sell, what we would be selling is would be a put, hopefully somewhere around 5% below where the stock is trading. And I usually use $5 wide spreads. You can use 2.5. You can use whatever you want, but $5 kind of makes everything easier to calculate and compare to other potential trades. But having weekly options is essential, in my opinion, and you got to make sure you have open interest because, I'm sure everybody has had a case where you got into an option trade, but you couldn't get out. And that's because of open interest and liquidity. Okay. So what are we looking for? So here's what I kind of look for after earnings. The biggest thing is I'm looking for repeatable patterns of stock movement after earnings. So if you have a stock and it always moves up after earnings, that's kind of on my radar for a potential trade. If it's hit or miss, if 50% of the time it's down in 21 days or up in 21 days, that doesn't give us any edge. So I just skip it. So we really want to know, does the stock continue to move in the same direction after the initial move? And that based on our historic data. And does the stock move higher after earnings drop? So if it drops after earnings, where is it in 13 to 21 days? Some cases, there's a good case for a bullish stock that drops on earnings that might be a good put spread or a diagonal call spread once it kind of bottoms out. And the other thing is, how does the stock move on larger expected moves? Because these will happen pretty frequently where, they expected a 5% move and the stock gapped up 15%. So I want to know is like, based on history, anytime that we've had a kind of an outlier move, is that something that's tradable? So those are kind of what I'm looking for when, after the announcement and then, how did the stock move? And after the open, then I'm starting to look at these things. Any questions?
Question on chat. Do you ever take into consideration analyst upgrades, downgrades, or price adjustments for strike selection?
I think back at the beginning, I said if there was some big news, like a stock just got upgraded, that'd be really good for a bullish trade, right? So I'd be more inclined to look at, that one as a potential trade. If the stock got downgraded or there was just bad news, like the CEO is retiring in a month, probably just want to stay away from those this particular quarter. But yeah, so anytime there's news or information, we want to know what it is and see if, that aids, our thesis or detracts. And the good thing is there's tons of earnings every day, so you don't have to compromise and say, oh, this is an okay after earnings trade. Just pick the really good ones and your numbers will kind of show it.
And here's a question on chat I'm not sure I quite understand. Does slam.com look at earnings? I guess,
Yeah.
are you asking if they announce the earnings on slam.com? Maybe that's what they're asking.
Yeah, well, I mean, Option Slam doesn't instantaneously post what the earnings move. They don't,
Okay.
but I mean, you can go to any, you can go to your option chain and see where it's moved. I mean, what I'll tend to do is I use Tasty Trade, so I'll look at what's the bid ask after the earnings. If the stock was at closed at 160 and now the bid ask is 180, 181, I know it moved up.
Yeah. And usually too, brokerages will, if you look up the stock on a brokerage, they will tell you what the earnings announcement was.
Yeah. Now
it just came out. So
yeah, that's true. Like investing.com and I use bar chart. There's a bunch of them, CNBC has great information, Yahoo Finance. There's a ton of ways to find out where the stock is going to open. And again, I kind of try to peek and look at the bid ask on the option chain to see what it did.
Okay.
Okay, so what info can we extract from the data? This is back to JP Morgan's data. So the stock went higher 78% of the time after 8 to 23 days. The stock was higher 100% of the time after 34 days. And the range went from up 4.4 to down 6.4. 3.6. So that was the range. And then after 5 days, the price was higher 78% of the time. And what I did is I went back and I excluded the one event where it missed and went down 3.63%. And if you exclude that, they almost all did better in that kind of after earnings thing. So my takeaway on this particular stock was if the stock has a positive move after earnings, then this would be a stock I would look to see if we could set up a trade on.
The question, what tools do you use to do all these calculations? You're just looking at the number.
I'm just looking at that
Option slam.
Yeah, I'll go back. Like this is the one I'm looking
Yeah.
at. So this is shows you, like how many times, like I can tell real quick because there's 9 on here. So 7 out of 9 times it was up after earnings, after 21 days.
Another question here.
Do you ever consider seasonality? For example, maybe like retail stocks, they generally announce poor earnings in the summer months and good earnings in the January months, things like that.
That's a great question. I haven't done that yet, but one thing that I have started to look at is if you go like on this particular chart, if you go back and say, because someone had asked this before, it's like, well, how does the stock perform in January earnings or in, the end of the year earnings? So that's probably something that really makes a lot of sense. And I should probably, include that in the analysis, but I don't currently do that.
Oh, another question.
I'm just curious, does Option Slam have a screener you can?
It does. It has it, and Tammy, I'll be happy to show this after we go through the slides if people want to see it.
Okay. Yeah, I think so.
Yeah, there's a lot of screeners and I'm sorry, I didn't hear that.
So you're scanning first for this?
Yeah, what I will look at is I look at the calendar piece and I'm looking at, what stocks are announcing earnings. And I'll show that to you in just a sec. Okay. So I think the slide got a little out of whack, but this would have been a trade we would set up on that JP Morgan based on the information. We would have sold in this case, we sold a 280, 275 put spread. It offers an 11% return on risk in 7 to 14 days. 85% probability based on Tasty Trades platform. And my history on these put spreads has been about an 85% win rate with holding it about 7 to 10 days. So they work pretty good and pretty fast. And my losing trades were actually call spreads that I put on. So I kind of shied away from setting up call spreads on these after earnings, trying to stick strictly to bullish moves. And again, an alternative to that trade would have been, a diagonal call based on the expected post-earnings move, or a broken wing butterfly using the data, say, 30 days out. Here's kind of additional information that I have kind of learned probably the hard way in some of the cases. Earnings on stocks in the same industry tend to move the same way. So if Bank of America announces earnings and it did poorly, then a lot of times similar banks like Wells Fargo or things like that are going to kind of mirror what the leader kind of said. Not all the times, but it's pretty close. Like if an oil company has earnings, because they're all dealing with the same, pressures in that industry. So if a stock has done good, then I'm more optimistic about, potentially trading that as an after earnings trade. I tend to wait at least 30 minutes before putting the trade on. And one thing that some people have said, like, hey, this would be a great wheel strategy. And I think it is. However, I think you need to, be sure you're willing to take the shares at whatever strike you sold. I have found that bearish moves are more difficult to trade after earnings because sometimes they just get worse and sometimes they recover. So, but somebody has suggested doing a put butterfly on these bearish moves, so your risk reward is kind of flipped on its head. I think that makes a lot of sense. You want to also be aware of event risk, like if there's a Fed meeting or some big economic report coming out around the same time, just know that, that could affect all stocks. And then again, I just listed option slam and bar chart. I use them. There are plenty of others. So, so that is my stuff. Any other questions?
I'm not seeing any.
Okay, awesome. So I've got a Facebook group page, Conservative Covered Calls. There's also stock market option trading. That's a group that I work with Eric O'Rourke on, and I post a lot of my trades. And then here's my email address. So if you have any questions or feedback, I'd love to hear from you. And you can join our Central Florida Options Meetup group. We meet, once a month in person and on Zoom.
Hey, I do have a question for you.
Yes, sir.
Hey, I've seen your video on I don't remember what I think it was Theta Profits talking more about the in the money covered calls. I assume you're still doing a lot of that.
I am.
Okay. Do you ever use that on these
I
trades, or
haven't.
you kind of avoid it?
No, I don't think I would avoid it. I just haven't kind of married the two together.
Right. Okay.
But I
Just
think
curious.
I think it's perfect for an in the money covered call as an income strategy.
Okay. Yep. Just curious because I think you did list that as a potential
Yes, I did.
strategy to use.
Mhm.
I just didn't know if you had tried that or not.
Yeah, not on purpose.
Okay.
Okay, so
So over the years of whatever strategy that you've been trading, do you have any particular favorite strategy that is just your in and out every day go-to type of strategy? What's your favorite strategy, you'd say?
I mean, outside of earnings trades,
Yeah, yes.
I do a ton of. I do some leap covered call. I do some leaps on SPY that I sell either daily or weekly calls for income. I do a lot of put spreads. And I do a ton of poor man's covered calls, diagonal calls based on bullish a thesis there. So a lot of these, strategies that we talked about are ones I do outside of earnings, and I do a lot of in the money covered calls. So I like to try to do a dividend capture on a in the money covered call, which adds to your income. But I don't do, the zero DTE SPX to the extent of Tammy, but I'll piddle around with it every once in a while. I'm a little more conservative. Tammy, like she scares me how much risk she's a great trader. I'm a wimpy conservative trader.
Actually, what you do scares me even more than what you do.
Yeah. Here's
So,
another.
what's your trading platform?
I use Tasty Trade.
Here's, yeah, make sure it's green.
Yeah.
There. Or you may, if it's black, just hold it and it'll hold it down. What color is it?
Oh.
Yeah, hold it down to get it turned on. And then we've got a mic issue here.
That's okay.
There you go.
This,
Still not coming through.
I can hear him okay.
Okay.
okay, so I should.
Now I couldn't hear that.
There you go.
There we go.
So I started looking at this back in 2016, and I discovered that this is the most studied academic area in the world of economic finance, and it's called post-earnings announcement drift. And I have been coming to technical trading sessions for probably 20 years at that point, and this is in 2017 is the first time I heard of this word, post-earnings announcement drift. But it is a true stock market anomaly, and it's tradable. And a couple of notes on that. So I mean that's a good phrase to put into ChatGPT or AI and
Cool.
look at the background of it. But the original paper on post-earnings announcement drift was published in 1968. So when I discovered that, I got all into wrapping technical indicators around the earnings dates, et cetera, et cetera. It's a total pain in the ass, but it can be done, and nobody is really doing it the way I like to do it, so I have to do it myself. But two things I do that I think is that anybody with enough effort can also emulate is I use the Investors Business Daily EPS range and tie that in with the earnings date and look for that to jump within a few weeks of the EPS range to be moving around the earnings date. That's one key thing. The other key thing I did is I subscribed to the Zacks Research Wizard, which is a bargain at a lifetime subscription of $5,000. But it's got 600 fields of fundamental information. It's got the earnings date in it. I get a data feed with that. It's a little slow, and it's a delayed data feed, and I also get end-of-day data. So that's my stock market data. I get industry group names. I get the size of this company, et cetera, et cetera. So, but the whole Zacks system is set up around earnings estimate revisions. And that information is usable with the system that you're doing here, is to look at those earnings estimate revisions with respect to the stock. So one of the things you can get out of the Research Wizard, and I use this all the time, is it will generate a one-page PDF summary of the stock that's up to date when you print it. And it's got a bar chart in the bottom of the earnings when it exceeded a stock that exceeded the earnings estimate when they announced. And that's a critical information for selecting a stock to trade around earnings. So that's what I do, and I encourage you to look at the Zacks Research Wizard or just the Zacks site in general in order to look at earnings estimate revisions, because the entire Zacks system is set up around that. Their Zacks rank is set up around that, and it is a true stock market anomaly. Leonard Zacks wrote a book called Stock Market Anomalies, and this is one of the chapters in that book, and it's a persistent anomaly that's tradable.
Cool. Good stuff. And I will look at the IBD earnings EPS or the EPS, and that's a good additional data field. So appreciate it.
And the pain in the ass part of this is these fundamental quant variables or ratings that both Zacks and IBD put on the stock.
they change very rapidly.
They do. They
So
do.
you can't just look at it and say it's not static.
Right.
You're using them all the time. So again, part of the pain in the ass of this is you have to keep your database up to date by going to their website, scraping the data, or use, like I said, I use the research wizard primarily, and basically keeping track of it
Yep.
on a day-to-day basis.
Yeah.
That's a large part of my process, is just looking at the ratings changes.
Very cool. Yeah, I mean, one thing that I have noticed is, IBD will say, like, hey, we expect this to beat earnings based on, and I found that they're right about 50% of the time. So I quit,
Their forward-looking stuff isn't as good as that.
yeah. So anyway, but good stuff. I think the more information you can kind of work into your analysis, the more it increases your probability of being correct.
Yeah, go ahead. Yeah.
Wanted to make sure we're still gonna take a look at next week's.
Yeah.
And you walk us through, because I'm looking at Earnings Whisper now, and there's a lot of interesting companies that we can use, and you show us your system real time.
Sure. Yeah, absolutely. So,
And one question before you get to that is, do you have any data on your actual trades, like win rate or ROI or?
yeah. So I did this presentation probably, what was it, about a month or two ago,
Mhm.
and I posted my actual trades on the credit spreads. I took that slide out because it was already dated, but it was about an 85% win rate and 7 days expected, at time in the trade, and about a 9% return on risk when you count in your losers.
And how many companies are you doing this on each order?
I mean, each day?
Well, I guess I
Like-
tend to think earnings come in bunches on quarters, but
Yeah.
if you're doing it every day, how many, or roughly how many stocks are you looking at? I'll say that, over whatever period.
Yeah, I mean, I would probably say going into an earnings event, I'm probably have narrowed it down to 2 or 3 stocks. So that once I see, what they did in earnings, then I kind of run the numbers for those 3. And I'll just pick the best of the 3. I don't put more than one new after earnings trade on every day.
Okay. So fairly frequently then, if you're doing
Yeah,
it.
I mean, it kind of comes in batches, like
Yeah.
when the banks are earning, I might do 2 that, a day kind of thing. But then there's kind of a lull between the in earnings season. I might just not do any. So I mean, I don't set out to say I need to add 5 this week or 10 this week. I just kind of look at them, and
Got it.
if they meet the criteria, then I'll put the trade on.
Okay. Now for some live info.
Okay, let me stop the share here, and then I'm going to show you Option Slam. Oh, that didn't work. Okay, so now I'm going to share again. Okay, so can you all see Option Slam here?
It's coming up.
Okay.
There you go.
Okay, so this, first good a great question. Let me get this thing out of the way. Okay, so if you want to look at go up here and see what trades are coming up Monday. So I can just go here to Monday, and I always select stocks with weekly options. And then I want to make sure I'm looking at like a $50 minimum. So this will then give me, these are the stocks that have earnings either Monday after the close or before the open Tuesday. So then I could just go in here and click on like ADM as an example. So here is ADM. So it tells me, that EVR is 2.0. The implied weekly move is 2.5%. So this, may or may not coincide with what Tasty is telling me. and that would be the 815 option. So you have a little chart, and then it will tell me here, after they announced earnings the last 2 years, did it end up or down that particular day? So you could see here, it had just a few up days and a lot of down days. Y'all see that?
Yeah.
And then sometimes people say, well, I want to go back further. You can actually click here and it will list all of the earnings all the way back to, I don't know, 2002. So you can, go as much detail as you want. I try to go 2 years. But so the other piece that I use a lot would be the post earnings data. And I would look here to see, where is the stock 13 days, 21 days after the earnings event? And what I would tend to do is if a stock went up, which it didn't happen a lot, but you can see that every time it went up over the last 2 years, in 13 days, it was up again. And if you look at the downside, like every time it's down, or almost every time it's down, it stayed down. So so that's kind of what I would look. So in this particular case, if it passed my screening as a bullish contender, if it gapped up, I would look, consider running the numbers for a bullish trade. If it went down, I'd probably pass. But it's got a lot of cool stuff in it, and you can do a screener based on all of this criteria. So, I mean, it's a kind of a clunky website, but it has a lot of really, good information. So that's the website that has, and they'll give you, like other one, just kind of, just different ones based on implied moves. But again, if we just go back to, is there one that somebody wants to look at?
Volunteer.
Oh,
Oh, they have.
Okay,
Yeah.
hello.
We'll see what they did.
Okay, so here's Palantir. So you could see, this is a mover, right? So it's up 23%, it's down 15%. So so it's gonna pop, right? Its IVR is 6.6. So this is one that I would probably, if I was gonna play Palantir as an after earnings, I would probably look at something like a Butterfly or a Poor Man. But let's look at their after earnings. I mean, their post earnings. So you can see here, like on this one where it dropped 12%, it didn't get any better, right? This one, it went down 3% and it got tanked after 21 days. Where it goes up, you could say, okay, it tends to move in the direction of the initial gap. And then what you would do is you would, take that information after the initial move and all the, the gyrations kind of stop and say, okay, it's up, 15% based on this data. I think it's going to move further over the next 13 to 21 days. And then you could build your trade around that.
After you screen for announcements that are coming up, do you check the open interest on those
Yeah.
companies to make sure they've got adequate open interest?
Yeah. So
or do you just look for well-known companies?
No, I mean, I look at the open interest before the, when I said I get down to like 3 stocks.
Yeah.
I've already, some of them, even if they're well-known companies, they may not have good open interest, or the bid ask is just terrible. And so I just throw those out. You don't have to be picky, that they're great, great companies with great open interest, that those make your kind of finalist list, in my opinion.
Okay. Another question here.
I've got one. CAVA,
Okay, yeah.
And to add to it, if I already own shares enough to do covered call, does that go also into your strategy?
Sure, like well, here's Kava. So you can see, how it's moved over the last 2 years. It's almost, what is it, 1/3 or a little bit less than half up moves versus down moves. So the down moves have not been, other than this one that was in 2023, were pretty minimal down moves, right? So that's probably encouraging. One thing that I don't know if I was clear on, like this first column is the actual open for the day.
Okay.
And then this one that says max, this is how far it went at some point during that first day.
So that one on November 7th, the second from the bottom,
Yeah.
opened 1% up,
Uh-huh.
but then it went down 10% within the day.
Right. And closed at 7% down.
And closed at 7.
Yeah. So that's why you want to wait that 30 minutes to 3 hour kind of time frame, because like in this particular one, you'd have been like, oh, great, it's a great move, or a decent move. And then you simply watch the chart on a 5-minute basis, just give everything plus some up. And then at some point it bottomed out and moved up a little bit, right?
Yep.
Like this one that went down 3.79%, it had dropped as much as almost 10% before rallying and ending the day up 7%. So those are some pretty wild guys to trade.
Yeah.
And in terms of, could you do a covered call based on
4.3? The EVR on that one is 4.3 there.
Yeah, 4.3, right. Yeah, and generally what I'm pretty much trading, not on purpose, but are, 1 and 2s.
Okay.
How
How about looking at OKLO, Oklo?
Okay.
OKLO. OKLO.
Okay. Okay, here it is. So it's a 6.0 EVR.
High volatility.
And this one hasn't been around long, right? So it's it has limited experience. So that would be a red flag for me.
Yeah.
And it looks like when it does well, it does really well, and when it does bad, it does really bad. So, and let's look at the post earnings. So this would be a stock if you were going to trade something like this, Tammy. If it gaps up, you go, we're off to the races, and kind of thing. If it gaps down, then you can say, well, this probably isn't going to get much better after 21 days. Does that kind of explain why there's a lot of value to this post earnings information?
Yeah.
The other darling is the video.
NVIDIA, let's look at NVIDIA. Okay, so it's a 3, so not bad, right? Here's the chart, which I don't really pay as much attention to. So here's the close. And again, I don't pay a lot of attention to the open because it doesn't really matter, right? So, you can see it closes up slightly more than it closes down. And so the first thing that I'd be looking at is to say, okay, on these 2 days where it didn't do well at all, how did it do after earnings? I mean, in the
post earnings.
In the post earnings, thank you. So you can look here, the the first one, 8.47 in 21 days, it wasn't any better. And this one went down, what was it, 3%? That's not bad, but I'm sorry, 6%, and it was down 9% after earnings. So it looks, just on a quick, unscientific review, that if it gaps up and if it gaps down, it doesn't generally improve quickly.
Yeah.
and also I'm seeing here like on several where it gapped up, it pulled back and went negative within 21 days. So this is probably a stock that I just wouldn't trade it as an after earnings trade.
Yeah.
So I'm sorry, and Brian, this is pretty eye-opening, or am I missing something? Because NVIDIA is the darling of the world.
Mm-hmm.
Everybody's buying their chip, hands.
Right. Yeah.
But this is saying that you darn well better be looking out, because there's a lot of red in the
Yeah.
last couple.
Well, it's saying that after earnings, the stock gets really volatile.
Maybe people are taking profits.
Could be. I mean, that'll be like in a case where the stock, like I always say, a crappy stock that gaps up, I guarantee you profit takers are jumping in with both feet.
Yeah.
But
scroll down to or up to the chart.
yeah, okay.
Yeah, just to see. Yeah, so it's.
I mean, it's a great chart, right? It's
yeah.
This is a daily chart, but earnings are kind of a different story, right? It paints a story of, if you're holding it long term, it's not a big deal. But if you are swing trading this thing, you don't want to hold it through earnings because you could give back all of your, and the weird thing about this particular stock is it opens and where it finishes the same day, it can really move, right?
Yeah. I've got a couple other requests for stocks.
Sure, go ahead.
Apple and Goldman Sachs.
Okay. Okay, here's Apple. So it's a 1.5. And this is the post earnings. Yeah. Actually, I did post earnings. Let me do the first way. Okay, so this is your chart. Nice looking move there, right? One thing you can also do on this chart is you can go back and you can see where did the stock move as it headed into earnings. So if you were looking to do like a pre-earnings trade, I call them pet trades. You could say, I'm going to hold this as it goes into earnings, but get out before earnings. So here's go ahead, Tammy.
You can see on the chart there, it looks like, I like that earnings are the little red dot.
Mm-hmm. Yeah.
You can see the stock just dove after every earnings.
Yeah. So, and then here's your
and it'll
thing,
show
right?
up here.
Yeah. So it opened, and at the end of the day, 7 out of the 9 times it was down. But let's look at post earnings. So that's one day. So here's what it did down the road. So it got better, I would say, just looking at it real quick. But I would also say that if it did badly at earnings, like down 4% or down 3.7, it didn't get better. But on the other ones, it probably did okay. What was the other one, Tammy?
Goldman Sachs.
GS, okay.
Yes.
This is like a test on my ticker. Do I know my tickers?
Yeah.
Okay, so here's Goldman Sachs. It's a 1.3, so that's kind of like, and look at this. This is post earnings again. So
that's nice.
Like this is a trade that, as long as it didn't crash out of the gate, you could set this up for a nice credit spread, right? That's kind of the whole idea, or a diagonal, however you want to do it. So it's a great little website. So
it sure is. Can you sort by that EVR? Like
you can. I don't do that, but you can. If you went up here to Stock Screener, one of the things would be you only want to look at 1s to 4s. Oh, I'm sorry. Where did I go? Okay, and this would be 1 to 4. And then it would print it. Like, let's go out here and just look at Monday for anything that, and again, I don't do this, but it's great. And you can drop it to Excel and things like that. So, so anyway, these are ones that have earnings on Monday that have an EVR of 1 to 4. Now, there's a lot more because they may not have options and they're probably not weeklies.
Do you do any nuances between stocks that open before that report before open versus at close. And the example I'm looking at, I think John Deere was Thursday, and they report before open.
Yeah, I don't think it makes a big difference. I mean, because all the action is going to happen after the open. However, if it announces at 5 o'clock after the market close and tanks all night long, then I probably just don't want to be a part of it. Yeah, so here's Deere.
Yeah, Deere.
So it's kind of hit or miss, nothing definitive. Let's look at the post earnings. So you could look, you could say when it gaps up, how does it do? It does well most of the time. So that's kind of how I use this data. And if it's not like clear cut, then I just look for other candidates.
Yeah, plenty to look at.
Yeah. So
what percentage, there's a question in chat, what percentage of the time do you estimate historical data is a predictor of future movement after earnings?
Well, that's the whole basis of this strategy.
Yeah,
I'm 100% in this particular strategy.
Yeah, so if your win rate is say 85%, you could say, I guess you could say that with your filtering that you're doing, then 85% you're estimating correctly on future movements.
Yeah. Now, again, I've had better luck on the bullish side than the bearish side.
Have you already looked for this week?
I haven't yet. That's my work tomorrow.
Oh, okay. I was going to ask, could you tell us the ones that you're going to do?
No, I don't know yet, but it's a fun, it's a great way to kind of trade earnings without all the risk and drama of holding them through the earnings event.
Yeah. All right. Yes, another question.
Is there like a good time maybe to?
That went on, maybe the battery.
But
is there a good time to buy the subscription from Option Slam, like a annual thing, like maybe on Christmas?
Do they have any specials?
You know what? I think they're pretty old school. They don't generally have a big sale, and I don't work for them or anything like that. So, I think they're like so affordable that, I just, I mean, for $200 a year, it's a pretty good deal. But it is a little clunky. I mean, it's not the fanciest looking website in the world. It has a lot of other stuff in it that I didn't even talk about. It kind of says like, let me see, this is the weekly move. This one kind of shows you what was the move either outside the expected or inside the expected. So that has a lot of cool stuff in addition to what I use it for.
Good to explore.
Yeah, I think they do a trial membership too. So, and they also do a lot of webinars, about different strategies, but they're primarily like holding it through earnings kind of strategies. But I've tried it through earnings and have sworn those off. And I just focus on the after earnings.
I think when I was following Tasty, they're big on earnings trades. But I would lose as much as I'd win. So
yeah, that's the
50-50 deal. Yeah.
And if you look at a stock and you go like, well, Nvidia is a great company, and then it gets tanked on earnings, you lose heart pretty quick.
Yeah.
Editorially, why do you like Tasty? Do you have anything that jumps out at you that why you selected Tom Sosnoff and the Tasty people?
Well, I've been with them probably 8 years, so it's hard to change. But I think, it's a pretty, their fees are competitive. It's very user friendly. Their customer service is really good. It's not, their charting isn't as good as others, but I can use other charting platforms. So. I don't think that I'm not trying to, sell anyone on Tasty. I think Thinkorswim is just as good. I never had much luck with some of the really low end, um, you know, discount platforms. So just kind of stick with what I know. And I think it serves what I need it to do. And it's got great customer service. So that's the other big thing.
On the screener, this is a question from chat. Can you filter out stocks without options? Or
You
does it
can,
already
you
do
can.
that? Okay.
You can. Yeah, you can go out here as a screener and it would just say somewhere in here it will say, does it have options? Yeah, they say list top and then it would say
Stocks with options. There you go.
yeah, so you want stocks with weekly options kind of thing. So
Okay.
and there's a lot of good videos that kind of walk you through how to use these screeners kind of thing. I don't personally use it. I just look at what's coming up this particular week or day and kind of pick my candidates through that.
Have you found that overall market news, like recently tariff related news, has an impact on this strategy?
Yeah,
I would think it would.
That's a great question. Yeah, I would say that what I've noticed more um, than ever before is the forward guidance is kind of what everybody's basing the price movement on.
Uh-huh.
So, and that comes out right after the earnings number. So that's all kind of baked into how it's going to open and move in that first few hours of the day.
Any other questions? If not, well, Brian, this has been excellent. I think
Thanks.
it's one of the better presentations
How do we
we've
see your
ever had.
website or your groups
Yeah.
meetings?
Meetup.com. Just go to meetup.com and search for Central Florida Option Trading Group.
Yeah, just Central Florida options. It'll pop up. And if you have any trouble, shoot
just
me an
join
email.
that.
Yeah, and you'll get all of when we have our next meeting and stuff like that.
Yeah.
Okay. This has been fun. Thank you for asking me,
This
Tammy.
is great. Yeah, thanks.
Thank you very much.
So, yeah, and he said, Rob, he said he had about an 85% win rate on this. So,
that's on the put credit spreads.
On the put credit spreads. Yeah. Yeah, excellent. So thank you so much for joining us. And yeah, getting a round of applause here.
Oh, thanks.
And,
thanks, everybody. And y'all have a good rest of your day.
Okay.
Enjoy your hurricanes.
Yeah, thanks.
Okay.